Just taking a look at the Bitcoin chart on this Saturday evening, just 42 minutes past midnight on Sunday. We're still tracking in the same area of cell liquidity creation that was pointed out some time ago. We have a couple of tests into that exact area, which was the close of this vector candle on the 4-hour time frame. They always go back to points where they have committed retail liquidity in the past, which was on this high volume area. That wick is the same 2 points as we showed previously of the breakdown, this close in this wick, of the breakdown of the stop hunt area, which occurred on the 30th of June. This breakdown, so that area on the 15-minute time frame is the close in the wick where they took the retail liquidity. And you see when we extrapolate this area, price has been consolidating around it ever since, getting rejected here, getting rejected here, getting rejected here, rejected here again. I do think that we will eventually break this area, but it's a case of, so I'm in a long from this retest here. So we've come back to retest it again. Market maker bottoming structure on all time frames. However, it doesn't preclude the possibility of a revisit here. So there's a possibility we get stopped out at 19,130 stop loss, but fully understanding that this is an area that they could take money from. This vector candle is where they've got retail to commit money in the past. So taking a somewhat of a punt, obviously risk managed punt, but that they will just actually do it from here. But it's totally possible that that scenario plays out and we get stopped out and we just have to go again, re-entering in the direction of the trend whenever they do decide to bottom it, on the assumption that uh, following the theme of the volatility expansion, just get rid of the draws temporarily. Just like I said in previous videos, that when this compressing data set is containing the ability of price to move down, you see that it's no coincidence that we got this extreme action at that point where, as we were explaining, they were driving, if we just turn the draws back on to make the point, they were driving price through the obvious long stop losses into this retail, into this area where they could commit retail liquidity, thinking that price was going to the bottom of the range, which it could still do, but at least not from here. And they accomplished their mission of a cleaning out long stop losses with this break, and then you think of exactly where would you've had where would retail have put their short stop losses, selling the market to the market makers here, which is what the market makers want, going short or selling to the market makers with stops above this obvious high. And where does price go? Exactly to that point. So they've cleared out the long stop losses with this breakdown. And then with this massive vector candle, they've cleared out the short stop losses as well and brought it back into the range. And that's the game. And they just do that until they play that game, clearing out stop losses long, clearing out stop losses short, back and forth all the time, every day, until these algorithmic data sets not so much permission price to proceed, but make it easy from a volatility expansion perspective to um, to move price. So price is getting rejected by that liquidity area, but I mean it need not necessarily mean anything. Like price could do anything, like come down into this area and then bounce. I'm just assuming, like, there's a lot of noise in this huge candle that was created with that stop hunt. So, it's not optimum trading conditions, and as a result, I have reduced the risk of my positions in this sort of market because, you know, generally if I risk X per trade, I'll risk maybe 0.25x on it when the conditions are like this because when you have this volatility, there's so much volume created like in this entire range that like they could really put price anywhere within it to find that liquidity again, and it's just a case of wherever the orders are. So it's the edge is a little bit less pronounced in this sort of market, and hence the risk per trade is reduced, um, commensurate with that kind of increased noise. But we go to the measured chart, the measurements of the trading range. We see that the same data set is replicated on this chart too. Um, the idea is we're going to start moving up towards this point in the chart whilst being contained by this data set because it is compressing. I think price is going to converge, or the data set is going to converge on price as it kind of moves within this range, and that is still the predominant thesis. Hasn't yet really been falsified. It would honestly, it would just be a case of trading the range because it's not even falsified by a break of the low. You could easily do that and bring it back in because whilst the data set is moving down and compressing and ultimately will come back in like this because that's how compression works. They get these breaks of the data set, they could easily get another break of the data set, bring it back in, get another break of the data set, and break the low within this consolidation structure. So it's just really a rough guide. Like we could break within this medium term data set, the orange one, and move towards this level, or we could break down and then move towards this level. It's really just the idea is we're waiting for this data set to be compressed because then we have a more probabilistic chance of um, price um, playing ball basically with our idea of continuation to the downside. So we'll be looking to add size to shorts here. We'll be looking to add size to shorts here for a breakdown, around, I don't call exact timing, but let's say this plays out as drawn, if you can see through the scribbles. Um, so like something like that, you're getting short as the downward parabola is beginning and as price then starts to expand out again to facilitate lower prices down into these areas, similar to this breakdown here, because this is part two of a three push pattern, and we're anticipating that part three, down to wherever, maybe even 9K, is going to progress and then a bounce. And that is the predominant idea at Umbring Capital at this time, and has been for some time, and will continue to be until falsified with a high volume break of the range. If we start to retest these levels, then obviously the idea of downward continuation is probably at least paused. Um, so that remains to be the view. If you can squint through this drawing, the squiggly drawing, and go with my concept, um, that's what I believe price is doing at this time. And we will continue to monitor it and keep ourselves apprised of the progression of the what is just a time series of data, like no other, or like any other rather, time series of data, and it can be observed and manipulated and quantified in the same way, and such that gives you probabilistic schematics for what price will do. And I will keep banging this drum because it is the way the price moves, the way I see price moving, and um, we hope that our edge persists in the market and we can continue to read the flow of money um, through this market.